A Bitcoin ETF, or exchange-traded fund, is a type of investment vehicle that tracks the price of Bitcoin and allows investors to buy shares in the ETF, rather than buying and holding the underlying asset itself. Hello and welcome to today's episode of Cryptogeek.info on Bitcoin ETFs. In this video, we will be discussing what a Bitcoin ETF is and how it works, as well as the benefits and risks of investing in one. The ETF provider holds a certain amount of Bitcoin and the fund's shares represent a certain amount of ownership of that Bitcoin. When the price of Bitcoin goes up, the value of the ETF also goes up, and when the price goes down, the ETF value goes down. Step 1. Understand the ETF basics. An ETF is a type of investment fund that is traded on stock exchanges, similar to stocks. ETFs hold assets such as stocks, commodities, or in this case, Bitcoin, and can be bought and sold like individual stocks on a stock exchange. Step 2. Research the ETF provider. Before investing in a Bitcoin ETF, it's important to research the ETF provider. Look for information about their track record, fees, and any regulatory approvals. Step 3. Assess the risks. As with any investment, it's important to understand the risks involved. The price of Bitcoin can be extremely volatile and can fluctuate greatly in a short period of time. Additionally, ETFs are subject to market risk and may not perform as well as the underlying asset. Step 4. Consider your investment goals. Before investing in a Bitcoin ETF, it's important to consider your investment goals. If you're looking for a long-term investment, a Bitcoin ETF may be a good option, as it provides exposure to the price of Bitcoin without the need to hold and store the actual asset. Benefits of Bitcoin ETFs include the ability for investors to gain exposure to the price of Bitcoin without the need to buy and hold the actual asset and the added liquidity provided by trading on a stock exchange. The ETF also provides a way for investors who are not able to buy Bitcoin directly, due to legal or regulatory restrictions, to still gain exposure to the cryptocurrency. However, it's important to note that the use of ETFs is still subject to regulatory approval and currently not all countries have approved Bitcoin ETFs. Additionally, ETFs are subject to market risk and may not perform as well as the underlying asset. In conclusion, Bitcoin ETFs provide a way for investors to gain exposure to the price of Bitcoin without the need to buy and hold the actual asset. However, it's important to understand the risks involved and do your research before investing. As with any investment, it's important to consider your investment goals and risk tolerance before making a decision. Thank you for watching. We hope you now have a better understanding of Bitcoin ETFs. If you have any questions or you want to learn more about it, feel free to leave a comment or check out some of our other videos on the topic. On Cryptogeek.info YouTube channel we talk about the most interesting trends in crypto. Hope to see you in the next video.